Hi, everybody. Thank you for waiting. We had a little technical difficulty this morning, but
Good morning.
we're back. Good morning. Thank you for being patient, and we are going to get started here.
Well, it looked like we were trying to get it popping this morning for y'all with the
Yeah.
music. And then when we did that, I guess Facebook gave us a hard time with
Shut
that.
us down.
So they shut us down briefly. So we were trying to have fun. And usually we have no problems. But today, I guess, hey, that's the devil. We're going to get through this. So good morning. Good morning.
Good morning, everyone. Thanks for showing up today. We are going to get started. We have not done this in a while, so we are excited to bring you some new content today for sure.
And we are live, so bear with us on everything. We are going to actually try to get through this presentation. I'm pretty sure that, you guys are going to have so many questions, and we're going to try to answer everyone's questions along the way. But for time purposes, we want to get through it, and most likely we will already answer your questions.
Right.
But if not, we will be calling out a couple people's questions that we feel like we haven't answered,
Right.
to get those answered for you today. So we are going to get started.
Awesome.
All right. Okay, so information about broker services. So I am a licensed Texas realtor, and I work for a company called Ultima Real Estate. So before I talk about anything real estate, I have to disclose that to you guys, that what company I work for and who I'm licensed through. So as you can see, I've disclosed that to you guys. Okay, and next we're going to talk about renting versus buying right now. I think we have kind of a lot to say about that.
So much to say. Yep.
How many of you guys are renting right now? Or you currently may be owning a home and want to sell, but how many people are currently renting? And please feel free to use that comment box, everyone.
Yeah, we are trying. We're going to try to make sure that we are checking that box throughout the event so that we can answer some questions. But, I have conversations daily with people that are always seeing rents going up to $1,900, $2,100, $2,200 for rent for 3-bedroom apartments. So rent's a big deal right now.
Okay, so literally a 1-bedroom. I actually called around for a client because he sold his house, and the rent price for a 692 square foot apartment was $1,700.
Oh my gosh! What city was that in?
In Grand Prairie.
In Grand Prairie. So it wasn't even Dallas. That's crazy to me.
$1,700. So
that's wild.
This just gives an illustration, guys, that when you over the course of 5 years, if you're currently spending about $1,600 currently in rent, over the course of 5 years, you've spent $96,000.
That's insane.
That's
you don't think of it that way. Nobody ever thinks of it that way when they're spending that much money a month.
And then if you've been renting for 10 years, $192,000. That's a lot of money. So if anybody's spending more than that and you've been renting over 5 years, wow, that's a lot of money. But when you buy your house and you pay your monthly mortgage, you can gradually accumulate what it's called equity. And we're going to talk about equity and all of that today, later on down the line. But equity is so important right now. It's
so important. And I think right now it's more important than ever because DFW grew so much last year. And we saw it where housing went up, 8%, 10%, and it just continues to grow. Houses at the beginning of the year last year, they were what? You could get a house for $250,000. That same house today is $300,000.
Yep.
I mean, that's just the way it is.
Yep.
So if you think about that, if you bought a house last summer for $250,000 and then a year later it's worth $300,000, let's just be generous and say it's a year later it's worth $300,000. That's $50,000 in equity in 1 year's time span.
In 1 year, and people are cashing out over.
And they're doing it. Yes.
So we're going to talk about that a little later
Absolutely.
on, guys, because that is such an important topic, I think, to touch on.
Yep. Absolutely.
Especially right now. But the biggest thing, guys, also, again, make sure we can see your comments too. If you're in the group chat, we can't see anything, but hopefully you guys are commenting under there if you have any questions or anything. All right, we're going to move on. Understanding the market.
Gosh, this one's hard.
This is going to be probably my favorite slide today because we're going to really touch
on the market.
On the market.
Things have changed so much. I mean, it's just been a wild year.
And first of all, this is my favorite question on my events. How many of you guys give me permission to be real about real estate today?
I know.
I need to see a show of hands. Give me some thumbs up, some likes, some
I'm seeing
hearts.
some. Hi, Cassandra.
We do. Okay. Okay. So
Awesome.
thank you, because we want to give you the real about real estate in today's market. And so many people don't understand the market today.
Yeah.
And that's what that's really what we're here for today, is to really talk about today's market, not last year's market, not market 10 years ago, but the market today, from the lending aspect of it and from the realtor side of
Right.
it. So that is what we are going to discuss. So a buyer's market versus a seller's market. Okay. In a buyer's market, we typically have a lot more inventory. You'll see a lot more homes on the market, versus when we're in a seller's market and we don't see so many homes on the market. We may or may not be in a multiple offer situation, so you may not have to compete. But man, I can't tell you how long it's been since I haven't seen anything like that
In a buyer's market.
in a buyer's
It's
market.
been a minute. You know, me and Kalisha, we joke about this all the time because we've been doing this for quite a while. We've been
Right.
partners for 5 years now. So when we look back at our career, we're like, man, every year something changes. You know, experience matters so much.
Yeah.
And it's been quite a while, I think, since we've been in a buyer's market where we're seeing people
Yeah.
give seller concessions, or where you're able to even go in and say, oh, this house is listed for 300,000. I'm going to offer them 280. We're just not in that market anymore.
I mean, I remember the days that we could ask sellers
To
for
pay for closing costs.
closing costs. We can ask the sellers for a concession of
To change the carpet, you know,
X amount of
anything.
dollars.
Yes.
I mean, we are not at
We're
all
not there anymore.
in
No.
that type of market to ask for anything.
No.
And we are also going to go more into detail about all of that today, because we want to set the proper expectation for this market. And I can't preach that enough. And you're probably going to hear me say it over and over and over. But through the experience, me and Katie, we don't have all the answers, but we're experienced. Okay.
Yeah.
We've been in this market for a very long time. I'm going on year 8 as a realtor. So I've experienced some different markets along the years. Every year is a different market. Every quarter is a different market.
Yeah.
Realistically to
Absolutely. I think that's fair to say. Every quarter something changes. We're
Every
throwing
quarter.
a curveball.
Yep.
You know, there's more and more people moving in, more job reports
Yep.
are out. I mean, it's every quarter.
And then also in the lending,
Oh, yes.
the lending side, every quarter may be something different too,
Every
along with
hour.
the market. So we're having to adjust every
Pivot.
quarter. So like last quarter, we may have been doing something totally different to what we're doing right now at this very moment. What worked then may not work now.
Correct.
Or vice versa. So yeah, it's a lot, guys, but that's what we're here to educate you on today, because so many people are just, you don't know how many phone calls I get. Well, is it a really good time to buy right now? And we should hold off. And
Yeah, that's a daily conversation.
that's a daily conversation. So also in a buyer's market, sellers are typically more anxious to sell. You'll see a drop in home prices.
Not now.
Not now. And you can usually buy at list price or below list price. How many people remember those days? Where
Barely, but I do. Barely.
Where a home was on the market, right? And it may have been sitting on the market for quite some time. And, I remember the times where I could go in and, man, the home may have been sitting for 15 days.
Yeah.
And that's a little too long back in the day.
Yeah.
And we can offer $5,000 under.
Yeah. Those were the good days.
And we are not there anymore.
We're not there, but that's not to scare you. It's just to tell you we are experiencing this. We know exactly what we're doing. We know how to get offers accepted, and we know how to navigate through these uncertain waters. So that's what we're here today for. We want to just tell you exactly what it's like in this market.
Exactly. And then a seller's market. Okay, so I'm going to go into the seller's market, but then I'm going to tell you the difference between the buyer and the seller's market of where we currently are in both situations. Okay, so being in the seller's market right now, it's less inventory. As y'all can see right now, if y'all on Zillow, Realtor.com, anything online, how many of you guys are seeing the house on the market and then gone probably the same day or the next day?
Yeah, it's so fast.
It's
I mean, things
so
are flying
fast.
off the market.
And if you are still seeing it on the market, I'm pretty sure it has a deadline of multiple offers by
Mhm.
they're leaving it on the market for an extra day or two, but
Yeah.
then it's multiple offers, highest and best by
Yep.
whatever day.
And then builders are doing auctions now.
Oh, we're gonna go
So we'll talk
so
about that in
much.
a little bit too, but builders are actually doing auctions to be able to build a home. So where, before, even as early as last year, we were able to go get people new builds, if nothing
Right.
else. And now builders are even low on inventory. So
Mhm.
we'll touch on that a little bit too.
Yeah. And then in a seller's market, of course, you're going to be competing with multiple offers and the home prices are going to be more expensive, but we are in the DFW. So, of course,
Yeah.
and home prices are going to continue to go up.
Mhm.
That's just where we are. The cost of living is going up,
Yeah.
let alone the housing market is going to
Yeah.
go up. And that's why you see interest rates going up and
Yeah.
all of that stuff. So we're going to touch more and more and more on that as we get through this presentation. And then typically in a seller's market, you have to bid in a seller's market, you're going to have to bid at, over list price right now. And what we mean by that is what I mean by that is when you have to bid over list price, it's not saying that you want to overpay for a home.
Right.
Okay. Because the market is, I mean, what do they call it? Where so many people are paying over appraised value or they're overpaying for homes right now
Mhm.
in certain areas, right?
Right.
And that is very true. Okay. You may be paying over what the house is worth in this market. That is very true. However, as a consumer, you are protected by an appraisal. And some people are even waiving, some buyers right now are even waiving their right to an appraisal because they just want the house. And
Yeah.
if there's a specific area that they've been wanting to live in,
Yeah.
they don't even care about the appraisal. So let me give an example. If a home in an area is 300,000, okay, and a client or a buyer offered 360,000, they're saying, and that house may very well not be worth 360 yet,
Yeah.
but they're saying as the buyer, I don't care if it's worth 360. I'm going to pay 360 because I know I want to be in a specific area or whatever the case is, and most likely they're going to get that money anyway because they're
Mhm.
going to get equity into that home, but they don't mind overpaying for the house that they know is going to in the future long term is going to make the money back anyway.
Right.
So yes, are buyers overpaying for houses right now?
Yeah.
Yeah, absolutely.
That's the normal.
That is
Mhm.
the new norm. I used to
Mhm.
preach about, oh, you don't ever have
Have
to
to
worry
pay,
about
yeah.
overpaying for a house.
Yes.
If some of you guys have been on our home buyer,
Yes.
well, came to our home buyer events when we used to do them live.
That was one of the things we used to really talk about. You're never going to overpay because you have an appraisal.
You don't have to worry about that. But now the conversations, you guys, if you've been
Very
following us for a
different.
while, they are so different than
Yep.
what they used to be. Like
Yep.
so different. So
There's a very good chance you're going to be paying more, but it's
Mhm.
just not going to last very long. So
yeah.
what you do need to understand is that even though you may be paying more for it today, the way the market's going and the way that it's trending upwards, that
Mhm.
same house that you're paying more for today in 30 days is just going to go right back to where it's going to even itself out.
Right.
So the market's still continuing to increase even though you're thinking that you're overpaying, you're really not because the market's catching right back up. So
Exactly.
people are still gaining that equity very, very quickly. In my house, I was able to refinance in as little as a year. That's almost unheard of. So
Right.
with this market, you have more opportunity as well. So that's what we want
That's good,
to
Katie.
teach today
We're
is
gonna
that you've
talk
got
about
a ton of opportunity
Yeah.
in this market to be able to buy and then grow the equity,
Grow that equity. I mean,
grow your
whew,
equity.
that's good stuff, Katie.
It's the first step to financial freedom.
All right, moving on. Pre-qualified versus pre-approval. I'm gonna let you go into this, Katie. What that looks like in
Yes.
between the two, because so
Yes.
many people don't understand what a pre-qualification letter is versus a
A
pre-approval.
pre-approval. And it's
Go into
so
detail about
big.
that.
And I think right now, just because of the way the market is, and it's so important to understand that a pre-qualification means that you're filling out the application. I'm sending you a link. You're doing your application for me. And then I go in there, I look at everything that you've put in that application and I'm taking it at face value. I'm not verifying your income. I'm just going to take your word for it. I'm going to take your stated income, your stated assets, and I'm going to take your word for it. And I'm going to pre-qualify you based off the information that you put in your application. And we have a saying in this industry. We always say it, buyers are liars. Because
Sorry.
sorry, and it's true, but it's
Yeah.
funny because I do it too. And
Yeah.
it's not really that you're lying. It's that
Yeah.
you're like, oh, I was there for 2 years at that job. It's
Yeah.
because we guesstimate, right? So
Right.
as consumers, if I'm filling out an app, I do it. How
Yeah.
long were you at that job? Oh, I don't know, 4 or 5 years.
Yeah.
How much do you make? Oh, about 30,000 a year. So they round up, they guesstimate. And so if we haven't verified that information as a lender and you're going out and putting offers in on a home and you're not pre-approved, which we'll talk about next, it's a disadvantage to you. It's a disadvantage to your agent, and it's certainly a disadvantage to a seller. And these agents nowadays that are listing these homes, they're savvy. They know the difference between a pre-qualified buyer and a pre-approved buyer.
Yes.
A pre-approved buyer means that we're looking at your pay stubs, we're looking at your income, we're looking at your assets, we're looking at your 401k, we're looking at everything and we're verifying it. We're actually underwriting that file.
Right.
So we are pre-underwriting you without a property. So that way, when you put in an offer, it's same as cash.
Yeah.
It is same as cash. As long as there's no house to sell and there's no contingency.
Right.
And even in those cases, we can do that too. But it's same as cash offer. So when you're competing against other cash offers, huge. So the difference in pre-qual and pre-approval is so important, and people really need to, if that's something you're writing down, take a note of that, because that's so important.
And I highly encourage everybody to be taking notes today, because there's so much value that's going to be shared. And again, when you decide to work with us, we're going to reiterate a lot of these things that we're talking to you about today. But the information that's going to be shared today is going to be so valuable to you, because you're going to get actual accurate information, not from your friends, not from your cousins
that bought a house a month ago.
Yeah, or somebody that bought a house 10 years ago, right?
Yes.
Let alone you hear that all the
time.
time. Well, my mom bought a house 10 years ago, and this is what guys, it's totally different. So that's why we are here to provide you with the accurate information today. What's happening today on the lending side and on the real estate side, okay? And to piggyback off what you said, Katie, being fully underwritten by a lender is so important. And that goes along with the full pre-approval,
right?
Because in this market, waiving the finance contingency, being same as cash, even though you are financing, but it's equivalent to being same as cash, and offering maybe a shorter closing period right now, that is so key.
Yeah,
because
that's how you're going to win your offer.
Yeah, because you have to think about it, guys. We have so many investors. We have so many people, even people that are not investors,
that are moving from California
and now are New York.
In New York, everywhere. They're just coming to Texas.
Yeah, and I want to give an example. So I had a listing, for those of you that follow me, I had a listing that we listed the home for $275, and I had realtors calling me, did you list this home incorrectly? And I was like, no, I know how to do my job. did
You're like, no.
Did you look at the comps? So, yeah. I had to say, no, did you look at the comps? Did you see what's going on in the area? Because $275, a home that looked that good right now for $275, they're automatically thinking, what is wrong with that house? What's going on in that house? But that is what the area says. So that specific area that I listed the home in is in Crowley. And Crowley, of course, is on the outskirts of Arlington, next to Burleson. So that area is moving a little slower than some
to catch up to the market
than some other areas. So I can't overprice just because we're in that market. I still have to compare it to what the comparables are over there and put it at a price to where it can go up or whatever happens, but I listed it at a fair price. So needless to say, we had 31 offers, guys, 31 offers on my listing. And the person that won was an elderly couple that paid $316 cash.
Oh my gosh, yeah.
Not an investor. Okay, not an investor. These were people that were downsizing from I don't know where, because I didn't ask the additional questions, of course, but
they had the cash.
they have the cash at 316, guys, not just an investor. So what I'm trying to say is it's not just investors that have cash money to buy these homes. Some people are, so many sellers right now, guys, are cashing out because of the equity that they have,
Yep.
that they're able to drop cash money on homes right now, depending on how long they live there. So that is what you are up against, okay, when you don't have a full approval coming into this market. It's very important that it's not, you know, whether you decide to work with me or Katie or not, it is so important that you have the right team. And we're going to talk about that too later, because being fully underwritten up front and waiving that contingency, that finance contingency, is so important in this market.
Right.
Okay. So I had to touch on that. That was very good, Katie, because, you know, that's very important.
It's the biggest piece of the puzzle
right now.
I mean, you can't, listing agents, I mean, as you know, you're listing houses every day. You're not even going to look at a pre-qualification. That's not even, I mean, you can't afford to. You can't afford to do it for your client. And you wouldn't do it for your buyer either. And so it is absolutely necessary, if you do an application with me, that I look at all of your documentation, make sure it's underwritten. That way you can compete with these offers that are same as cash, or that are cash.
Yeah. And then you have the confidence.
Yeah.
Too.
Yeah.
So,
and then you know what your payment is, and you know what your cash to close is. You know what you're getting into.
Right.
It's important.
Absolutely. So that's good stuff. A lender's checklist. Katie, you can actually talk about, you know, as a lender,
some of the things that we need.
What are some versus, let's say, and some of you out here are maybe entrepreneurs that are on, and some of them you are W-2. So what would a W-2 person need, Katie, to turn into you?
So a W-2 person, somebody that obviously gets a W-2, but it's also somebody that gets a paycheck, salary, hourly wages. So we're going to look at your 2 years W-2s versus your tax returns. But if you're self-employed, we're looking at your taxes.
Okay.
And then it depends, because some people that are self-employed have business tax returns and personal tax returns. So we need 24 months business and personal tax returns, and we're going to average your positive income over 24 months.
Okay.
So that's how we're going to decide what income you make. And there's a misconception on that. I think a lot of people that are entrepreneurs don't know, as we both learned the hard way.
Yeah.
You know, before we even got into this business, that this is how it works. But a lot of people don't know, if you're an entrepreneur and you make hypothetically $100,000 a year and you write off $100,000 in income with business expenses, I have zero money that I can count for you.
I'm so glad we are touching on this.
I know, because I actually have a client right now, and she's like, Katie, I didn't write anything off. I'm like, fantastic, send me your taxes. And so she sends me her tax returns, and in her mind, she did not write anything off, but she wrote everything off. And in fact, I had a loss for her business. And that happens more often than you think, but you can't write, and you can, and you are entitled to write off your business expenses. So I'm not a CPA. I'm not here to give tax advice. But as far as a lender perspective, what we have to do in our guidelines that we have to go off of, we have to make sure that you have positive income that you're paying taxes on in order to get government loans, which is Fannie Mae, FHA, conventional loans. So you have to have income that you can count. You have to have income that we can average. So that's a key thing. And so you're going to need somebody that's seasoned, that knows exactly what they're doing, to look at those tax returns, because once your tax returns are filed, you can't unfile them.
Right.
You can't go back and say, oh, I want to amend it. I want to take all those expenses that I wrote off away. You can't do that. They won't allow it. So you would literally have to wait another year in order to qualify. Right now, you're in a good time because you're going to be filing your taxes. So, you know, if you're an entrepreneur, self-employed, and you want somebody to look at your tax returns, I would be happy to. Again, I'm not a CPA, but I can tell you, if you took off and wrote off everything that you own or everything that you did last year, maybe don't do that this year, so that we can average it out, so that we can have some income to qualify you on, because so many people don't know that.
So many people don't know that. And it's so important too, guys, that you are choosing to work with a tax professional that understands that you want to purchase a home, because that is the biggest thing with my entrepreneur friends. We don't want to pay all this money into taxes.
Nobody wants to pay.
But we don't want to pay all this money into taxes, but it hurts us so bad because we have to show the income. And if we're not showing the income and we're writing everything off, that is a loss. And that is actually showing that we didn't make the money that we actually really made, because we don't want to pay the IRS.
taxes.
So we don't want to pay the taxes. So, you have to understand that if you are an entrepreneur and you're on here, guys, be very, very, very careful, because the average that they're going to combine this is 2 years.
2 years.
They're going to take the average for 2 years. So if you wrote all of this stuff off last year and your plan is to buy a house this year, well, guess what? You're going to have to show more income this year to offset,
Yep.
what type of home you're trying to buy.
There-
And that's what people don't understand.
There is one exception to that. If you've been in business for 5 years,
Yeah.
and you have pretty good credit. I mean, there is a program that you got to have pretty good credit. Pretty good is anything over 700. So if you've got 700 credit score and we can prove you've been in business for 5 years, I can go off 1 year tax returns.
Oh, okay.
So that's really the exception. But in 99% of the cases, typically, it's 2 years tax returns. But
That's
we
good
can
to
look
know,
at it
too.
on a case by case basis. So if you are an entrepreneur and you've been in the business for 5 years and you can prove that you've been in business for 5 years, then we can look at the 1 year tax return option for you.
I
And
love
then
that.
the following year, you go back to writing off everything you want.
And I get it, because who wants to write everything off? Is me too, So I had to sacrifice for 2 years. 3 years ago when I bought my home, I had to sacrifice that 2 years to make sure I showed enough income for the home that I wanted. So it's very important, guys, that you, again, find a tax professional that is experienced and letting them understand that, hey,
And a certified CPA.
correct, or a certified CPA. I want to buy a home.
Yep.
They understand what that looks like, instead of going and writing off everything because you don't want to pay taxes.
Right.
That is going to hurt you. Okay. And I would really advise, and tell me if I'm right or wrong on this, Katie, I would advise that you really reach out to a lender.
Yeah.
Katie.
Yeah,
definitely.
definitely.
I would say reach out, because that's what I did. Before I did my taxes, guys, I was on the phone with Katie. Okay, Katie, what does this need to look like for, I want this type of home. This is what I'm wanting to spend. And I went over to the builder. I tried to figure out what the price point was that I know was going to need to spend. And I said, hey, Katie, what does this need to look like on paper for me?
Yeah. And then I go back to the CPA, and then the CPA will work up everything. And instead of writing off all of your miles that year or writing off all of your expenses, that's something that I would work with your CPA on so that we could get through it.
Yeah.
Live.
Yeah. So that's really good. That's really good stuff. Okay. So we want to make sure that you guys are just, doing what you need to do the right way when it comes to purchasing a home. Okay.
Somebody just asked, what if you want to buy land and build a house? That is a great question. Land is very, very different. Land is going to be something that you're going to do. My company does not do land loans, but you are able to build. So we do new build, new construction, but you would have to own the land first. So if you purchased your own land and you want to get your own contractor to build on that land, yes, that would still be something we could do, but not, we don't actually do just the land loan, because there's no collateral on it just yet.
Yep. Yeah. And guys, I had to pick up my phone so I can see some of your questions that you're asking. Katie, that was really good. Because someone did ask, about the land and building a house, and does that still apply for all of that?
Yep.
So that was Demetrius. So thank you for asking those questions. Moving on. Okay. So all right. We're going to talk about, the next slide is going to talk about the different type of loans that are out there for you right now. And Katie, this also is Katie's area. So she's going to break, and I'll piggyback, of course, off this stuff. But go ahead and talk about the different loans that are available to everyone right now.
Yeah, so these are the 4 main types of loans. So we've got your first one that everybody pretty much does, especially first-time home buyers. You're going to look at an FHA loan. FHA loans are 3.5% down. They are 580 minimum credit score requirement for an FHA loan. They typically, I would say, I do probably 50-50 between FHA and conventional financing. FHA, it's so much better for first-time buyers because it does require less money down, and it has a higher debt to income threshold, meaning you can have more debt and qualify for FHA than you typically would be able to with conventional. So the next one I want to talk about, and I know I'm kind of going out of order here, but FHA, and then there's conventional. Conventional, you have to be a first-time home buyer to get 3% down. If you're not a first-time home buyer, it's 5% down, minimum requirement for conventional financing. Conventional also requires a higher credit score. It will go down to 620, but it's kind of a case by case basis. So 620 absolutely for conventional. The main difference between FHA and conventional is the down payment requirement
Mhm.
and then the mortgage insurance requirement.
Right.
So that's something when we would do our consultation, once you do an application with me, I would structure your loan specific to your needs.
Mhm.
That way, you know exactly what you qualify for, what program's better for you. I look at every single loan application
Right.
as a fingerprint.
Yep.
Everybody's different, everybody's income's different, everybody's credit's different.
Yep.
Everybody has different needs. So
Right.
it's so important to get that application and go over what you do qualify for.
Right.
And then we kind of go into our niche products. So that would be VA, any veteran. So veterans obviously want to use their veteran entitlement. VA loans are my favorite loans. Veterans pay their bills. We love that.
Yeah.
Veterans have good credit. They're
Yeah.
organized. I hate to say that, but we just love our VA loans. It is 0% down, and you can use your entitlement for VA.
Right. Okay.
And then USDA is one that we don't do a whole lot of right now.
Yeah.
It's really outskirt areas. So
Right.
Aubrey, Texas, if anybody knows where Aubrey is. It used to be Rowlett used to be a USDA
Yeah.
area.
Oh, Waxahachie.
Waxahachie, USDA.
Waxahachie or Waxahachie.
Waxahachie used to be USDA.
Right. Mhm.
It does have 0% down. USDA is harder to qualify for.
Yes.
The town has to qualify, the city limit.
Yeah.
The buyer, and it has really strict buyer qualifications. So you
Yeah.
have to have very, very low debt to income ratios,
Mhm.
and the house. So house has to qualify, family has to qualify, you have to qualify, and it's harder to qualify for these. But I try them for anybody that's in one of those areas because it's such a good loan, and it could save you a lot of money because it does have a 0% down requirement. So I do every single loan app. I look at all four of these and see which one's going to be best for our clients,
Mhm.
and make sure that we're going over all their options because there are so many of them.
I have a question on the USDA.
Mhm.
Is there a specific credit score that has to happen for this
There
loan?
is, it is 640.
So at least,
At least a
USDA,
640.
you have to have at least a 640 credit score, guys,
Yep,
for that
640.
loan. And the most common loan type is the FHA.
Mhm.
And that you have to be at a minimum of, is it 580 or
580.
620 now?
It's 580.
Okay, so 580 credit score, guys, to qualify for FHA loan. But so
Mhm.
many barriers go with that
Yeah.
when qualifying for, if your credit score is that low.
Yeah.
Right? You have
Yeah.
to definitely have the income there.
Gotta have
I
money.
believe.
Gotta have money.
So yeah, the lower your credit score, of course, I think there's,
We call it compensating factors.
Yeah. Yeah.
So you have to have other compensating factors if
Yeah.
you're going to if you do have a lower credit score. And a lot of times, at 580, it's really hard to get a good interest rate at 580
Yeah.
because so many of these programs do go off of your credit score.
Mhm.
So in an environment where rates are higher, they're
Mhm.
higher than they have been in 2 years,
Right.
almost 10.
Right.
So we're in an environment where rates are higher right now,
Mhm.
and it's hard to get a good interest rate at 580. So I would look at that and say, okay, maybe we can get your scores up a little bit. Maybe
Right.
pay down a couple of credit cards, or maybe see if we can get some of these collections paid off and maybe try to remove them. We look at all of those things because we want to make sure that maybe that 580 can be a 600 and just do a couple of little things and you can get a better rate and get a better loan.
Right.
So we look at all of that stuff too.
Okay.
The next thing I want to talk about is one more thing on USDA. It is income restricted. So you
Mhm.
do have to have a certain income to be able to do USDA, and it varies by county. So I can't really tell you it's this right now because it does vary,
Okay.
but that's a good segue into our grant program. So I know a lot of people
Yes.
want to learn about the different
How many of you
grants.
guys want to know about the free money out there,
Yeah.
right? I'm sure that's why so many people are on this, right? You want to know what's out there for me. And people call it the first time
Yeah.
home buyer grant or assistance, but it's actually not for just first time home buyers. It is called DPA, which is down payment assistance.
Right.
So let them know about that, Katie.
There are so many programs out there. We do have on the lending side, I think I have some of my favorites. They do offer programs. They are income restricted. Most of them are hovering around 99,000 a year. For couples, you can't exceed that limit right now, but they do offer programs 3, 4, and 5% assistance. And so it's so key to understand that 3% assistance doesn't mean a 3% rate.
Yes.
And a 4% assistance doesn't mean a 4% rate, and 5% doesn't mean a 5% rate. But the more assistance you get, the higher the rate. And so me and her were talking about this in the car ride on the way over here. We're like, we have to make sure and tell people about the interest rate because they do choose the rate. So that's one of the things about the grant programs is and we can actually, if you want to email me, I just put my email in just a little bit ago. If you want to email me, we can go over and send you some links to some of those fire programs so that you can go do some research too. Cause I love that when people are like, oh, I understand, you understand it a little bit more. But those grant programs, they will pay up to, I mean, right now I saw one that was $16,000 in assistance the other day, which is huge.
That is huge.
If you think about it, the average closing cost is, you've always said 6%, you know,
I always calculate it based on
6%. Yeah. And so if you're getting 5% assistance, then you're only bringing 1% to the table. That's a big deal.
And it's mostly covered if you put your earnest money down. That's awesome.
So if you think about it, it definitely helps people who want to get into homes. And again, we're going to look at everybody's situation and make sure that we fit every single client. So we'll say, okay, maybe don't take, if we're looking at rate, maybe don't take the 5% assistance, maybe take the 3% assistance and bring some of your own money.
Yeah.
You know, we'll take a look at every single one to make sure it's right for them. But these programs are easy to qualify for. And we'll take them on a case-by-case basis, but they're pretty cool. We do quite a bit of them.
Yeah, quite a few. And the biggest thing that I wanted people to know about the down payment assistance is, what do we say in the car? I totally forgot. It was so great, but it's the interest rates on the down payment assistance programs are regulated by the state or the government.
Yeah.
They cannot be changed. So if you're saying, oh, I want the free money, then you can't take the free money and have the best rate. That's not how, this is America.
Yeah.
First of all, so we can't have it all, right? And if you're wanting that money, then whatever the rate is for that 3% or the 4% or the 5%, and all of them have a different rate, is what the rate is. It doesn't matter if you talk to Katie, Sam, Ashley, whoever another lender is.
That's so true.
The rate is the rate all across the board if you use down payment assistance programs.
And how many times have I said, I'll call you and I'll say, I just told them that. I just told them that. And they're like, and she'll say, Katie, they just called me and said, why is my rate so high?
Yeah.
Why is my rate so high? Well, the rate's higher. It's going to be higher on these programs. So that's what we're getting at. The rate is definitely higher on these programs. And the reason we're talking about that this time, and if you've ever seen our shows before and we haven't talked about this before, is because a year ago, the rates were a point lower. So if the rates were lower a year ago, then I definitely want to tell you what that means today. So if the housing prices are going up and your rate's higher, you might qualify if you don't use the program. Let's say you want to use your 401k money instead of using one of the grants.
That's the topic too.
Then 401k. Instead of being able to qualify for a $250,000 house, now you're qualifying for a $350,000 house or $300,000 house or whatever it may be, of course. But it's a significant difference. And so you might not want to take that rate. You may want to get a market rate that's better and use your 401k money because you can do that.
Did y'all know that? How many of you guys knew that you can use your 401k? Let me see.
Anybody?
I don't see. Okay.
I did have a question on, can you buy a second home with FHA loans? You can, but you cannot own 2 FHA homes at a time. So FHA, you can purchase one house FHA, but you have to sell it before you'll be able to qualify for another FHA.
Okay. Yuri asked, how much annual income do you need to make to be able to afford a home nowadays?
Oh man, that's a loaded question.
That is.
It depends on every client's different. It depends on the amount of debt you have. So you can make $30,000 a year and have no debt and qualify for a home.
Yes.
Or you can make $100,000 a year and have so much debt that you cannot afford a home. So it really does. That matters. Doing an application matters so that we can see exactly how much home you can afford. And that's the point of this too.
Yeah. And to piggyback off that, I always like everyone to know every person, every case is different.
Everything's different.
From if you bought a home 5 years ago, it's different now. If like I said, if your cousin bought a home or your best friend bought a home, Your case is always different from their case. That's
Yeah.
why it's very, very, very important that if your goal is to become a homeowner, this is why we do this
Yeah.
for the community. We offer these free
The
virtual
experience.
events so we can educate the community, especially the minority community, on home ownership.
Yep.
We are so passionate about
Absolutely.
this. And all of this is free, valuable information. But you can't call Katie and you can't call me, guys, and say, I don't want you to run my credit.
Yeah.
I just need you to tell me if I'm going to be able to be approved or not.
Yeah. It's so important.
I'm not.
That's so important.
I don't have a magic wand, or I'm not a psychic. I wasn't
Yeah.
blessed in that area to be able to tell you that. So when you ask that, we can help you. And running your credit for to get approved for a home loan is very important if you want accurate information and
Yes.
feedback for your situation. Because if we can't see, the lender, which is Katie, can't see what is on your credit, what is happening with your debt to income ratios, and
Right.
anything about your specific file, she can't help you. So you can't call or email her and ask her for all these questions. She doesn't know them. She has to see your individual situation to determine what she can do to help you.
Right.
Okay. That is why filling out a mortgage application is very, very important, so we can see what's going on with your situation.
Yeah. And it's good to see, what is on your credit. If you haven't had anybody pull your credit in so long, I mean, that's such an intimate thing. And I understand why people are hesitant to pull their credit, but more often than not, when I pull somebody's credit, they're ready to buy. So often they're like, oh, I'm so scared. I don't know if I want to do this, but I definitely want to. I have to look at your credit. That's so important that I look at it, that I can tell you, look, you're actually ready and exactly where you need to be. You qualify for this program. You've got $50,000 in a 401k. This is the best opportunity for you. And I'm going to tell you why and how to get you there.
Yeah.
So every single consultation that I do that does a loan application, we go over every bit of that. So it's so important that you allow me to help you. And a lot of people are like, well, I wish you could just tell me I've got all these student loans. I don't think I should apply. Well, student loans don't necessarily mean that you're not going to qualify for a home loan.
Let's talk about student loans. That's great.
That's definitely something that we should touch on, because so many people do have student loans.
Right. How many of you guys have student loans? Most people do, right? Most people do. So, Katie, I'm sure so many people are wondering this. If they have student loans, how does it affect their home buying journey or process or getting approved if they have student loans?
So student loans, it varies per loan type. So it is going to be different for the loan types. FHA has different rules than conventional, so we do have to look at every one, but they just made their rules a lot easier to qualify. So usually, or actually just a little bit ago, FHA made us count 1% of the student loan, whether they were paying it or not. So if you have $100,000 in student loan debt, they're making me count 1% per month. So that's $1,000 a month I'm having to count against you. That's a lot of money. So whether you're paying it or not, whether you're a teacher, whether your loans are in deferment, because for 2 years, nobody's paying their student loans.
Right.
I mean, even if you were trying to pay your student loans, they wouldn't let you pay your student loans.
Right.
So the pandemic hit and everybody was like, oh, I can qualify now because I'm not having to pay my loans, but that's not the case. So they actually changed it from 1% to 0.5%, which is huge. People that couldn't qualify before actually qualify now.
So many people.
So many people.
So many people.
And there are different rules. Conventional is actually one of the really cool programs. If your credit score is high enough to qualify for conventional will let you use the payment on the credit report. So if your payment on the credit report is, $50 a month, I can use that payment as long as I can prove that your payment really is $50 a month. So there's different rules for different loans that people are so scared because they have all the student loan debt that they won't qualify, but that's not necessarily the case. So definitely wanted to talk about that today.
And I also want to touch on, if you do an application, guys, the whole point, whether you're approved or not approved, we're never going to tell you that you can't buy a house. We may just say not right now. Our goal is to never tell one person you can buy a house. That's not what we're here for. We want to help you be able to check that off your list. Okay. So the biggest thing is, for us to help you, you have to also be willing to help yourself. So if Katie is doing a consultation with you and you're not quite ready yet, and please piggyback off this, and you are not doing what she told you to do,
To get
to
ready.
get ready,
Yeah.
and you're coming back and you're still not ready, and you're still not ready, you have to put in the work if your credit is not there. Now, we are so blessed to have found a
We
credit
have a
repair
wonderful
person.
person.
Her name is Sharonda. She works with us, and she couldn't be here today, guys.
Oh my God, I love her.
Oh my
She's
gosh.
so good.
Please tune in to our next event.
Yeah,
Our
'cause
next
she's
event. We
amazing.
don't have the date yet, but man, she's going to be at our next event touching on credit. And I'm so thankful that we found her because she is, and if any of you guys are in credit repair and you've been in there longer than a year, something's wrong. Because the right credit repair person is going to get you in and get you out. And if the purpose, which most people's purpose of getting credit repair is to buy a home, and they're not talking to a lender to understand what they need to do to help you as a consumer to get approved for a loan, they're probably not the right credit repair person. They are just collecting the residuals every month. And I am not knocking anybody's business, but I'm telling you that you have the wrong person, because the right person is going to make sure that they are working like Sharonda. She works with us hand in hand. So Katie actually called Sharonda to talk about your file, and Sharonda knows exactly what to do to hit those things to get them off your credit. And guess what Sharonda's doing after that? As long as you listen to Katie and Sharonda, what they tell you to do, you're going to get handed back to Katie to get so many clients came back. And then guess what? Then you get to see me. And no, guys, you don't get to hear from me
until you're done
to me until you are ready, because I can't do anything, guys, for you
and
until you're ready.
I'm so glad that you said that, because that is such a big thing that we've done. I mean, you know, Kalisha and I, we've worked really hard at this. This is our business. We love what we do. We love our clients. This is what we want to make sure that we're putting these processes in place to help everyone that wants a home into a home. I'm never going to tell a client no. I'm going to tell you the steps to get there. And that's what we live that. And so we have put these processes in place that actually work. So if we tell somebody, hey, this is what you need to do, and they actually do it, there's absolutely no way they're not going to be in a home. There's absolutely no way. If you just listen to us, we have the tools to get you there.
So many success stories.
We do.
We've helped hundreds and hundreds of families.
Hundreds of
guys,
families into homes.
Not just a little bit of family. Like, we've changed people's lives that never thought they could even own a home. Like, our in-person events, they used to be so powerful. I mean, we would cry.
We loved
y'all.
them.
We change lives, and that's what I mean by it goes further for us to see this happen for you, and it means more to us. I think to Katie too, is that when we take our time to invest in you, to tell you what you need to do, and then you don't do it, well, we can't help you, because we need you to help you, and because we're willing to do everything it takes to help you, but you have to do the work, okay? And we have a process for a reason, and it works. And I've built a strong home buying team. The ladies that you see on this group, I've built such a strong, powerful, shout out to my ladies, right? Women empowerment group to help you guys, okay? And honestly, I have to say this, we may not be able to help you, right? Because we may not we're not for everyone, okay? Some people just come to us, they don't want to listen, and then they want to say we didn't help, or somebody didn't help, and that wasn't the case at all. Because if you're not doing what we're asking you to do, then it's nothing we can do. So our job here today is to help you check this goal off for your family and do this. And that's what we want. That's why we're here talking about and giving so much information. There's a process and
that has to be followed.
It has to.
Yep. And we really have taken the time to design this perfectly so that we are on the same page. And, you know, Kalisha and I work so closely together. We have designed this in a way that's going to make sure you're in a home, no matter what.
And we're not helping that many families for no reason.
Yeah, exactly.
Right? Exactly. So if we're not doing what we weren't supposed to do, you wouldn't see, if you follow me on social media, on Instagram, Facebook, you wouldn't see so many people getting handed geese.
Yeah, exactly.
Okay. So the next slide, guys, which type of buyer are you? Is one of my favorite slides too, because I don't categorize my clients by dollar amount. Katie doesn't categorize our clients by dollar amount. I categorize my clients by the level that they need me, okay? And I categorize by A, B, or C. All right. A being that you are a buyer that is ready right now. Okay. I am a busy realtor. I'm a top producer, but I'm never too busy for a client. And that's why I have a process for a reason. All right. My process is I give my attention to where it's needed. And my A buyers that need a house today, I have to focus on my A buyers because these are families. Sometimes it's right now it's taking longer to get people into homes than what it used to.
Yeah.
So I have to put all my time and energy into a buyer that's saying, Kalisha, I need you right now because I need a house as in yesterday.
They have their pre-approval.
they
They're
have their pre-approval.
pre-approved.
So
Yeah.
they are people that are those are the clients that are getting my time and energy. And the ones that are not yet pre-qualified or ready, those are the C. And they don't come to me until they become an A or a B.
Yep.
Okay. And the B buyer, they're pre-qualified or pre-approved, but they may need about 60 to 90 days for whatever reason. I will say, I usually don't like to even say B clients anymore.
I know.
It's either your A or your C.
Yeah.
Because we're like some kid in the candy store, right? Even as adults.
Yeah, we are.
When we get a pre-qualification for a house, what?
Yeah.
I'm ready, Kalisha.
Yeah.
I'm ready. So you may say
I called you
you're
in what, 4 hours?
Yes.
I pre-qualified myself.
Katie pre-qualified herself, y'all. What,
I'm
2
just
years
kidding.
ago?
I didn't actually do that.
No,
But
yeah.
I had my friend.
Well, she got a pre-qualification.
Yes, I had my friend. I'm like, hey, I need to do an app. It was my branch manager at the time. I'm like, hey, can I do an application? I need to see if I'm pre-approved. And he said yes.
Yeah.
In an hour, I called her, and within 4 hours, we were under contract. We
quick.
get excited.
Yeah,
So
absolutely.
there is really no such thing as a B buyer.
No.
There's really not.
Because either you're ready
or you're not.
And most of the people that are not ready is because they have some credit challenges that we need to work through.
Or a lease.
Or they're in a lease, right?
Schools sometimes. So they're very
In
small situations. But
or they're a year out because they're moving from a different state. I have a lot of relocation clients right now.
True.
So that I'm getting. But I want to talk about the lease.
Yes.
Right? Because I'm sure some of you are asking, if I'm currently in a lease, can you still help me?
Yeah.
We want to talk about that. So me and Katie have created what is called, we have a special program called a lease bailout program. Okay. Our lease bailout, I used to be a property manager for quite some time. And I know it may have changed by now. I don't know if the laws changed in property management, but back then, you usually had to give, in order to break your lease, a 60-day written notice. Mm-hmm. And then you had to pay a reletting fee, which is 85% of your rent amount. And it's really called AKA early termination fee. That's typically what you had to do. So since, back then we created this program because I was like, Katie, so many of our clients are under contract and they're approved right now, but they can't buy because they're waiting for 7-8 months
to get out of their lease.
To get out of the lease. And what do we do? And I was like, you know what? Wonder if we create a program to where we help them get out of their lease. And what we mean by that is you still have to give that 60-day notice, but we'll help with that early termination fee. We'll give you a credit for that. But everyone does not qualify for this, Katie. Right. And what makes somebody not qualify for our lease bailout program?
I don't know what would make you not qualify. I do know that we just take it on a case-by-case basis. Mm-hmm. I mean, typically, if we can't double up on all of the different programs, so we can't give you, lender credits, down payment assistance, reletting fee. Like there are restrictions to how much money can be given at a loan. So there are certain times that you just don't qualify for those programs, for those bailouts. But I would say 99% of the time we work it to where you're not paying a mortgage and a lease, and you're paying a reletting fee. So there are ways that we can be creative in the process and time it just right. Because when you buy a house, if you time it right, you're not paying a payment for 2 months either.
Yeah.
So there's 2 months that you're going to save there. And a lot of times what people don't know is you can call and get out of that reletting fee if you make the right calls in advance.
Right.
And a lot of people just don't know or look at their lease to know if they even have a reletting fee.
Correct.
So education and information is powerful, and just seeing if they even have to pay some of those things off. But most of our clients, we're finding a way to either get them that reletting fee, the full thing, or we're able to show them how to utilize those 2 months in order to pay some of those fees too.
In some leases, they don't even allow that. You have to fulfill the whole lease. Mm-hmm. There is no such thing. So I don't know. You would have to look at your lease in order, but to let us know that. But it is. I use it very like a case by case basis, because if you're getting down payment assistance, all these credits, there's on for a compliance purpose, there's not a lot that we can do on our end to continue to give more money on the table.
Right.
But we have been able to help so many people to that have been in leases that don't care about that once they actually get their numbers and what it looks like. They're
Mhm.
able to absolutely pay that relating fee on
Yeah.
their own. So it just depends, guys. Like again, we would have to look at
Yeah.
everything in total, and then Katie has to tell me, okay, this is what we can do or cannot do. Okay.
Yeah.
So moving on from that. The next slide we're gonna talk about is guess who's gonna be your new BFF? I don't do open relationships. So if some of y'all like, the open relationships,
That's not, she's not your girl.
I'm not your girl. I have to be honest. I am, you have to be loyal to me because I'm gonna be loyal to you. And I'm sure that you're looking for somebody to get the job done, right? You're looking for a realtor that is knowledgeable, I hope, that's experienced, I hope, and that you know that you can trust, I hope,
Yeah.
right? So all of those are key factors and probably more important as a potential client looking for or on choosing the right realtor.
Right.
And I pride myself in all three of those things for sure. And I can back it up with the proof on that.
Yeah.
I'm not closing and helping changing people's lives for no reason. I mean,
Yeah.
you can go to my Instagram page, my Facebook page, and see how many lives that me and Katie
Mhm.
are changing every year, is
Every
more
year,
and more.
hundreds and hundreds.
I
Yeah.
remember it was, we were praying for the days that we
Mhm.
have now to be able
Yeah.
to be on platforms where we can touch more
Quite
people.
literally. Yeah.
And how can we help more and more people with this? So
Yeah.
we're so blessed and so thankful to be in this position to help you guys. But you got to make the right decision on making sure that you choose the right realtor. And I hope that I am the right person for you because I know what I can do. I know what I'm already doing. And like yourself, I require things when working with me, right?
Yeah.
It's
Yeah.
not just about what you
She'll
want.
break up with you if she needs to.
It's not about what
I'm
it's
kidding.
not just about what you want, but as an entrepreneur, I get to actually also choose who I want to work with,
Right.
right? Because every client may not be for me. If it's all that negative energy and all that speaking that negativity
Mhm.
out of your mouth, I cannot work with people like that because I am such a positive person and I'm trying to help you. But if you're speaking such negativity constantly on every single thing, then we may not be the right
Yeah.
team for you because we are big on energy, right?
Mhm.
And we love what we do. And there's so many people that want to work with us. And
And we want you to be happy.
we want you to be happy.
It's a
Ultimately,
happy.
we want you to be happy. And if we're not the team to make
Yeah.
you happy, that is okay, right? But we strive,
Yeah.
to do that. And most of the time, we are
We
very
win. I mean,
successful with
it's
that.
rare that we're not able to find common ground and get somebody into a house that they
Right.
are, you know, they
Yeah,
need,
exactly.
So that's important.
So when working with me, I require communication, commitment, and cooperation. Those are very big things for me. I have a team of people that help assist me, assistant. I have a group that may come in if I can't, because I'm a mom, I'm a wife, I have so much on my plate too. But that doesn't mean anything for you. If you're looking for a house,
Yeah.
you're looking for a house, and it's with all you're not being disrespectful, but I don't care what you got going on. I still need to find my house. And I understand that. So I've put the right people in place to help me help you. Right. So
Yeah.
I may not be the one showing you all the time, but one of my group members that's on my group will help assist on showings or whatever the case may be. I may have tons of closings that day and I can't open a house for you. So I have somebody that's going to help me. So again, I require those things when working with me too, because it's very important that you understand that I want to help you, but I'm also helping everybody. Okay. Destiny, she said, to make the process go through easy for everyone involved, what information should we have ready to provide as an A buyer? Great question.
That's a good question. So I would say do a loan application for sure.
Yes.
Do a loan
Mhm.
application. And I can usually tell if you're an A buyer pretty quickly.
Yeah.
So if you have everything in place, an A buyer is going to be somebody that is ready and willing to upload bank statements, pay stubs, W-2s, and allow me to do a full consultation. So once you go to my website, you can email me today. I put my email on the thread a couple of times. It's
Mhm.
kguerrero@s1l.com. Email me. I will go over a full consultation with you, full credit consultation with you, and make sure to tell you whether you're an A buyer, B buyer, C buyer.
I love it.
You know, we want to make sure everybody gets to the A point, but not everybody's there just yet. But most of the time, we can get you from a B to an A pretty quickly.
Yeah.
So,
and if you're wondering, how do I get paid? You don't pay me. I don't know if anybody knows that, but you don't actually pay me. I am free for
That's
you.
right.
I work for free. Everything I'm going to do is I'm going to do it upfront for free. Driving around, maybe putting in several offers. I'm doing all of that upfront for free. We both are.
Yep.
Not just me, your lender too. So that's why it's important for us to make sure that we're working with the right client too, because we get to choose that. And of course, we want to make sure that you have a great experience with us. So we're going to move right along because we have quite a few things to get through too, and to make sure we're giving y'all some good information today. We're going to barely touch on this slide, but what types of homes that are available out here to you guys are, it's new construction homes. How many of you guys want a new construction, a brand new build? Let me see some likes, hearts, thumbs up. Anybody want new construction? Okay. Pre-owned homes. So those are people that are currently living in homes that are selling their homes. And then there's townhomes and condos. Okay. So there's 3 different type of categories, of course. So the average buyer right now used to look at, it says 3 to 6, as y'all know, this presentation needs to be updated just a little bit. But the average buyer does not look at 3 to 6 home in today's market. Most buyers are looking at, on average, 10 plus homes in today's market, literally. So be prepared
to put in some offers.
Be prepared to put in offers, but be prepared to start this process earlier than expected, not last minute.
Yeah. Okay? Don't wait until you've got 2 months before your lease is up.
Yeah. Do not wait. I tell people, start 6 months ahead of time, for sure. And some people that are pretty secure with their credit scores and all that, hey, about 45 days is good. I always say, not even 40, but literally maybe 60 days might be better for right now.
We could get you in a home in 30. Now it's taking about 60.
Right. And upfront cost. You know, this is, if I hope you guys are writing everything down, because this is very important.
This is the biggest one. Take a screenshot.
Yeah, take a screenshot.
Take a screenshot
of upfront cost.
Upfront cost.
Okay. So this upfront cost is a part of what Katie is going to go over with you when you are pre-qualified. But I'm going to break everything down for you. Okay. And none of this is paid, not just because we write an offer for you. It's not going to take place until the offer is accepted by the seller, of course. So the first fee is going to be the option fee. This fee is paid to the seller, and this allows you a certain number of days in order to change your mind and or get an inspection done on the property. Okay. If you decide to proceed with the house after the option days that we put on the contract, this fee gets applied to your closing cost. This fee is typically around $50 to $500. As you know, we need to update this presentation, because the more option fee you put in, because this tells the seller in this market how serious of a buyer you are, and it also shows them how bad you want their home. Yeah. So $50 doesn't exist. Not anymore. It's more like $500 and up now. And the scary thing is, this is non-refundable. So if you decide that you had a change of heart and you just don't want to buy the house anymore, or we can't negotiate the correct things during the inspection with the seller, and again, you just decide that you don't want to buy this house, you lose that money. Yep. Okay. But you have, like I said, in this process, in this day and age, you got to be willing to put some skin in the game. Of course, we don't want to see you lose money. And that's why I'll never write an offer for you if you're hesitant. Yeah. Because I can't help you win the house if you're not willing to use all the tools in the toolbox. Okay. We say that. And we're going to talk about that too. Yeah. Using all the tools in the toolbox. But this is one of them. You got to be really ready to go all in and do what it takes. And no, guys, if I come back to you and tell you, hey, there's multiple offers on this home, if you want it, we got to, do all that it takes. I don't know what the other offers look like. They can't tell me
Right.
what the highest offer is, what the best offer is. That's not how real estate works. We only have one
One
shot
shot.
every single time when we put in an offer
Mhm.
to make it the best one. So we have to go all in with everything we
Yep,
got.
everything.
So it's very important that you understand in this market, option fee lets the seller know how bad you want their
Yep.
house. Write that down. Okay. So when you're talking to me and we're at that point, then you understand that I'm telling you, because you're going to be like, well, what do you think I should do? And then my question to you is, how bad do you want the house? Okay. So you got to understand, you got to be willing to do what it takes if you want that house. Okay.
Absolutely.
The next one is earnest money. Earnest money is paid directly to the title company. It's a mandated fee of 1% and of the sales price. This fee is applied towards your closing costs. And again, for the option fee, I'm so sorry. If you do decide to go through with the house and everything is fine, it does go towards your closing costs. I don't know if I said that, but I want to
Okay.
make sure I made that clear. The earnest money is the bigger fee that you pay. It goes to the title company, and that's a fee that me and your lender, Katie, protects the whole time. Okay.
Yep.
But this also allows it allows you to put some skin in the game, and it also is telling the seller that you are going to be financed and you're getting financed and everything's going to be good,
Mhm.
for your loan.
Yeah, this is
Okay.
important.
This is a very important fee because it also makes sure the buyer and the seller are doing everything according to the contract. So you're both in compliance with the contract the whole time. Okay. You as the buyer, there's compliance purposes that you have to make sure that you're doing everything on the buying end to stay um in that and to make sure that you're not doing anything outside of that. So what that fee looks like, that if for any reason you defaulted, say we put a number of financing days, or we may not
Mhm.
put a number of financing days. So maybe we put 0 financing days,
Yeah.
but then you go decide to buy a car.
Yeah.
That means you defaulted
Yeah.
on this contract, is
Yes.
what I'm saying. That's the
Please don't do
example.
that. That's
And
the
that
number one
means
don't.
your
Yeah.
earnest money is up for grabs by the seller.
Mhm.
Okay. So yeah, it's very,
It's
important
important.
that you do the right thing.
Yep.
And we'll be going all over all of those things on a
On the
101
consultations, yeah.
consultations. Okay. The next one is the inspection fee. It is not required by the lender, but I never allow any of my buyers to buy a home
Without
without
one.
having an inspection done, because just because something look good on the outside, y'all,
Does not mean it
it
looks good on the inside.
doesn't mean it looks good on the inside. You know my spiel. So we are definitely going to make sure we're getting an inspection done on that property. The next one is the appraisal fee. I used to love talking about the appraisal fee,
I
right?
know, I
Because I used to
know.
be like, you don't have to ever worry about overpaying for a
Oh
house.
man, appraisal now it's the topic of everybody's conversation.
It's the topic.
And what's crazy is the weather's never it's always unpredictable, especially in Texas. So there's only so many appraisers and the market is so hot right now. It's hard to find appraisers. So
Right.
appraisals are taking a little bit longer. They're the cost to get an appraisal is going up. I mean, appraisals right now, average cost of an appraisal is anywhere from $700 to $800.
Yes.
So and that's a fee that does go towards your closing costs. So
Yes.
the three fees that will go towards your closing costs at the end are your option, earnest, and appraisal.
Yeah.
And it doesn't matter if you put down $4,000 of earnest money or if you put down $2,000 earnest money. It does go towards your closing cost ultimately,
Yes.
unless you decide to back out of the house. You will lose all of this if you change your mind. So
Yep.
that's why it's so important that you're absolutely certain that you want to proceed
Yep.
during these special times.
Yeah. So Victoria, you had a great question. If we're putting in multiple offers for multiple homes, we need to have these funds all for each home. No. So if you're putting, none of this takes place. I don't know if y'all see this, but it says once contract is executed. So we can put in multiple offers for 5 homes. We go see 5
Right.
homes and you want to put in all offer. Perfect.
That's a great question.
Yeah, that is an amazing question. Thank you for asking that.
Mhm.
No, we're not putting in. So once an offer gets accepted, the very first one, and you're good to go, we are definitely
That's
going
when you do it.
yeah, that's when you're gonna have the money ready for that home. But we're also
Yep.
going to pretty much send an email. So say for instance, another one, we put in 5 and 2 of them accepted your offer. We're gonna have to withdraw really quick from another one.
Yeah.
Okay. In order for, because if a seller signs it quickly, then you are obligated to pay it. So I have to work quickly
Right.
in these matters. And typically in right now, it's I never hear back from the same, like if we put in 5 offers, I never hear back from 2 of them at the same time. It's
Right.
rare.
It's very
So
rare.
I have that time. So if there's one that gets accepted and you love it, don't say, well, Kalisha, I really want to wait on the other one because honey, you can't wait,
You can't
because
wait.
most of the time, if you're not going ready for
Yeah.
that offer that got accepted and you're waiting for this other one to see,
It
we don't
never
have
works
no
out in your
time. It
favor.
never works out in your
Mm-mm.
favor. And I hate
I
that.
hate to say it, but
Um,
it's true.
and that's why I
And
always
that's why
tell
we say
people,
listen to us, because we are never, never, never going
yeah.
to lead you down the wrong path.
And I always say write an offer on homes that you really
That you
want to
really
write
want
it
to
on.
run.
So
Yeah.
that means if you win 1 out of the 3, hey, you at least got one of them,
Yeah.
right? Because there's times that I wrote offers on 5 homes, we didn't get nothing.
Yeah.
Okay, so it just depends. So that was a great question, but no, you don't have to
It
have
was
it.
a really
It's
good one.
only when the contract a seller has accepted your offer. Okay.
And
Or-
then those are also for A buyers too. I will
Yeah.
not give you a pre-approval until you're prepared and willing to write those 4 checks.
yes,
You got to be able to have the assets to be able to.
And
to
that's
move
a part
forward.
of Katie's spiel too. Before you get to me, that's
Yeah.
a part of Katie's spiel. So she'll be telling you some upfront costs, and then I usually break it down. I do a level 1 and level 2 consultation, guys. My level 1 is to get you to the lender, kind of pre-qualify you to see where you're at if you're ready to go to the lender. And my level 2 consultation is once I get the pre-qualification letter from Katie and she's reviewed everything, then you're good as golden. That means when I get that letter, that means Katie, I know you have the money.
Right.
You are ready to go.
Yeah. We're
Other
looking
than
for
that,
houses.
she's not sending anything to me until you're a green light. We usually do red, yellow,
Yellow,
and
green.
green. Red means you are not ready. Yellow, slow down. You're still getting things done. And green is she sends me that letter. I can get you in the car tomorrow.
Right.
Okay. Next thing is inspection. So when we're during that option period, when we're getting that inspection done, basically a house inspection is a non-invasive check of the structure, foundation, roof, electrical, plumbing, heating and cooling system, and built-in appliances. We're not going to go into great detail about that, but that is just what an inspection
And
takes
it's different
place.
the appraisal. A lot of people
Yes.
don't know that.
Yep.
So the inspection's the guts of the
Yeah.
house, like your AC.
Yep. And I will say in this day and age, guys, just because there's a house that may have green carpet and you put an offer in and it's accepted, the sellers are not going to change the green carpet just because you don't
Right.
like it. That's called cosmetic. And the reason why I added this a part of the slide for inspection purposes is these are all the major items that we are asking the seller to fix if something comes back
Right.
on the inspection report with one of these items. These are considered major items only. My job is to protect you thousands of dollars that after you close on this house, you're not having to deal with this. We wanted the seller to fix all of this stuff before we go to closing. Okay. So these are the things that I'm asking for in the home if that report shows that. Okay. Again, it is the structure, foundation, roof, electrical, plumbing, heating and cooling system, which is the HVAC, and the built-in appliances. Okay. Not if the wall is pink.
Light bulbs.
Not if the light bulb is out. Okay. You can
Change
do
the
all
wallpaper.
cosmetic things.
Right.
In this market that won't work is why I'm telling you. I'm not saying it to be mean. I'm saying it won't. The seller will laugh.
Yeah.
Okay. And they'll be like, moving on. That's exactly how it goes.
Yeah.
And I have to be direct with that because you'll be surprised that, some of my buyers will still say, well, can they give me a credit? Because I don't like that wall.
No.
They're not. They're not going to
Yeah.
do that. That's considered cosmetic. And honey, I will help you get some paint if you want to go
Yeah.
paint that wall. We're not asking the seller for that. Okay. Moving on. All right. So under contract process, under contract process. Katie, touch on what happens once I get the clients under contract. We've gone through the option period. We're past it. That means the seller and the buyer the seller agreed to all the buyer's repairs.
Mhm.
Now we are officially under contract. And what does that look like now?
Well, I think as I'm sitting here, and I've never thought about this until just now, I think I need a picture of me for me to be your best friend, because it goes from her being your best friend to me
her.
being your best friend. Then you're talking to me every day, either me or somebody on my team every single day. So
Right.
once you're under contract, you get turned back over to me. So you start with me, you go to Kalisha, and then you come back to me. So what I do when you go under contract is we scrub your file. We get any updated documents that we need from you. So you're going to be sending me pay stubs, bank statements, assets. There's going to be a lot of paperwork involved.
Yes.
And you are going to talk to me pretty much absolutely on a weekly basis, if not more. And then we're going to go over your payment, your cash to close. We're going to lock in your interest rate at that time. We're going to go over all of your options. We're going to do this twice. So you're going to do it when we pre-approve you. And then you're going to do it again when you go under contract. And then you're going to do it again right before you go into your closing.
Right.
So we're going to have 3 different conversations about this stuff because it's a lot.
Mhm.
During the loan process, it's tedious process. But
Right.
once you go under contract, the contract will be sent to me. We lock everything. We order your appraisal. We order your survey. We order your insurance, which is on the next slide.
Mhm.
Your homeowner's insurance. We do all of those things. You are doing your inspections with Kalisha. And then we get you ready for closing. And
Right.
then on your close day, you'll actually go to a title company
Mhm.
you'll sign your documents with Kalisha and the title representative, and then you'll usually get your keys the same day.
And while Katie is doing all of that with you, the title company for that very home is making sure that there's no back owed taxes or no
Mhm.
current liens on the property before you buy it. So they're
Right.
doing title work, just like on a car. You want a free and clear title. You want a
Mhm.
free and clear title on a home. So that is where the title company takes place. And that's what they're doing in the background, guys. They are making sure that house is free and clear of everything before you, as the new buyer, buys it. Okay. All right. Moving on. All right, understanding a mortgage payment. I think this was important that I added this to the slide a
Yeah.
couple years ago because a lot of people didn't know what actually
Went
how
into it. Mhm.
exactly.
Yeah.
So I think it's very, and I didn't know it.
Yeah.
Actually,
Yeah.
I've bought like 3 houses and never knew what actually went into a
a
mortgage
mortgage.
payment.
Yeah.
Believe it or not, I hate to say it, but I did it.
And
So
and
this is a
it's
very
so
good slide.
wild because you'll go on some websites and some of them are better than others.
Yeah.
And I won't name any names, but the real estate websites that'll give you a mortgage calculator, they're not necessarily accurate. And so it does such a disservice to us lenders because you'll get on a mortgage calculator and you'll go, oh my gosh, this $600,000 house is only
Yeah.
$1,600 a month.
Right.
Oh, well, the principal and interest payment only are $1,600 a month. So
Right.
that is such a common misconception.
Right.
So if you're looking at a mortgage calculator online and you don't know what you're doing,
Right.
that's a big deal. The property taxes are also in there. Mortgage insurance. Mortgage insurance is required if you do not put 20% down. And mortgage insurance is required on FHA loans. It's on USDA loans and conventional unless you put 20% down. So mortgage insurance is different than home insurance. Mortgage insurance protects the investor in case of default, and homeowners insurance protects the property in case of a hazard, wind, hail, fire, things of that nature. The last one's going to be homeowners association dues, so HOA dues. A lot of these communities, especially with the new builds, they have HOAs that manage their property.
Right.
So you're going to have another $50 a month fee that's
Yeah.
going to be in there. Now, your HOA is going to be paid to the HOA directly and not the lender, but these are the components that break down an actual mortgage payment.
Right.
VA is different. VA does not have mortgage insurance because they're different, but every other loan is going to have mortgage insurance on it too. So these are some things that if you don't know how to use a mortgage calculator, you can miscalculate a payment very, very easily because you just don't understand how to use it. So that's another reason why it's good to understand what's in your actual mortgage payment because it can
Exactly.
change pretty quickly.
That's good. That's good. Thank you, Katie. All right, moving on. So prior to closing, we're gonna conduct a final walkthrough on the property to ensure that the last time we seen the property, it's still in good condition, and then anything that we negotiated with the seller to fix, that they're gonna be that they've already fixed prior to closing. So we want to make sure that everything is done prior. So that we'll be going to go check the status of the property. Okay, prior to then. All right, and we're gonna move on to the next one. Closing day. Okay, so that means all of your time and efforts have been paid off. It's paid off.
It's paid
right.
off.
It's a great day.
It's a fun day.
That's where you see.
It's our
like a
favorite day.
picture.
It's our favorite
day,
day. It's our favorite day because all of our hard work is paid off.
too. Everybody, not just
Everybody.
yours.
It's everybody's hard
Yeah.
work is paid off. And we've been so lucky to help so many families into homes, and that's a fun day. So
Yeah.
closing day is definitely our favorite day. You get to go to the title company, you're signing your docs, you're making the best investment for your future and your family. And then we hope to see you again in 3 to 5 years because the average person buys every 3 to 5 years. And and
Yes.
the average person buys up. So these homes just get bigger and better and more beautiful.
Yep.
And there's a lot of fun happening on that day. Come
Yes.
picture ready. Make sure you're
And-
picture ready.
Yep, that's the biggest thing. And this is our last slide, but we're going to stay here because we're going to actually talk about more in detail some of the other things that we didn't get to elaborate on. And
Yep.
we're going to, I know you guys are
Have some questions
have
too.
some questions. We want to answer some questions. So we're going to use, we have so much to talk about.
Yeah.
First of all, we can stay on here probably for like
We
3
could probably
hours.
be here for a while,
but
we
know
won't.
It's a Saturday. People got things to do. And we want to get all the important things out to you before we end this. And then, of course, we want to talk to you one-on-one. So I'm hoping that everyone was able to get the application, Katie's email. I know her assistant is on here, Rachel, to answer any questions, and also giving her email for you guys. And I will also, after this, I'll jump in and put my email out there for you guys too if you don't have it. But I want to touch on a few important things that we need to talk about, that we want to go more in detail with.
Just a little, just some more things that we would definitely want to just touch on in this market.
Okay, so the number one thing I wanted to talk about was who you work with matters.
Absolutely.
In this market, who your team is, the realtor, the lender, all plays a very important role in getting you the home. Okay? If you don't have someone that has the connections, the relationships, and or the experience, it is going to be very hard for you to be able to get into a home market, because everything matters right now. And having the right team that understands this market, understands the builds, the connection with the builders, the connections with the other realtors,
how long it takes,
and how long it takes, it's all a key factor.
And setting expectations.
The expectations.
That's a big one.
So we want to make sure that you guys understand, even if you decide not to work with us, even if you're already working with someone else, please make sure that the people that you're working with is experienced, not just on the real estate side. On my side, as you can see, it's so very important that you work with a realtor that's experienced, but also on the lending side, because all lenders are not one and the same. All of them don't work with down payment assistance programs. All of them are not knowledgeable about the different options that are available to you.
Or they're not going to tell you.
You know? So it's very important, again, that you have the right team. And this is my team. We're a team, including my insurance, Laura, and Jerry Title. They couldn't be here today, so we did it. But the right team, and Sharonda, our credit girl, we could not. It's very important, like I said, for you guys to have someone working for you that knows what they're doing in all areas of the business.
Yeah, absolutely.
So that was one of the things. The next thing is being flexible, and in this market, buying a home.
Oh gosh.
So this was a good one, right?
This is a good one. Yeah, you got to be flexible.
In this market, so many people, most of my clientele want a new build. Who doesn't, right?
Right.
Who doesn't want a brand new home? And that's A-okay. But when you have a budget of under 500,000, I would say a little bit under 400, probably under 400,000, it is impossible to find any new build homes under 400,000
in the city.
And I mean closer to Dallas, closer to Fort Worth, anything in the inner, close to Frisco, Plano, anything that is considered inwards, Grand Prairie, it's impossible.
So if you've heard of the town, you're probably not getting in.
Yeah.
Right? I mean, honestly, if you we're talking outskirts.
Yeah.
Waxahachie.
Yeah.
We're talking about Rowlett.
We're talking about outskirts,
Josephine,
perimeters, Forney, Josephine,
Aubrey,
Roy City, Aubrey, Little M, Salina, Prosper, outskirts,
and even
of
those
Fort
areas,
Worth.
It's getting harder and harder and harder.
We're talking about so many people have already started migrating,
branching
outward, that those have caused the prices to go up even outward, and they're going even further than that now because of price point. So just keep in mind, okay, guys, the further out you go
from the city,
you get more house for a cheaper price.
Yep.
Okay, more house for a cheaper price. More inward you are, it's going to be more expensive. Bidding wars. I'm not saying that you can't win. I'm not saying that you can't win bidding wars. I'm not saying you can't win against multiple offers. I'm trying to help you prepare for what you're going to be up against.
Right.
Okay. More inward is going to be pre-owned. And if it is inwards in a new build, they are going to be priced at most likely from 700,000 plus. Okay. I'm very knowledgeable about the DFW. I also sell real estate in Waco. Waco is just as crazy
Mhm.
as the DFW.
Which it wasn't always, not
Can
even
you
till the
believe I
yeah,
was looking for a $500,000 home, 500,000 for a client yesterday, and
can't
there
find
was
it.
nothing,
Mhm.
nothing
In
on the
Waco.
market in Waco. And I'm from Waco, guys, so I do real estate in Waco as well. So shout out to all my Waco people if
Woo
any of
woo.
you are on here. But 500,000, nothing in Waco. What
That's
does that
wild.
tell you?
Yeah.
Okay, it's not a joke out here. So in this market, I wrote down for you guys to be flexible as a
Mhm.
buyer,
Mhm.
be flexible in your needs and wants in a home, because just because you're buying a home doesn't mean you're going to get every single thing. That apartment that you're renting now, that rental home that you're staying in right now, is that your dream apartment or
Right.
dream home, dream living situation. So you have to think nowadays as far as an investment purposes. Okay, what if
And
you
what
want that type of
yes.
house later
Yes.
on? You may not be able to get it right now for whatever the reason is, or you may be able to get it. It just depends, right? Your price point. But
Mhm.
if you don't, then you gotta
Change your mindset.
your mindset has to be changed right now.
Because here's one of the things that we were talking about. When you leave a home that you've been in that you don't own, or leave an apartment that you don't own, or leave whatever that you don't own, you're most likely going to get a bill, not a
Correct.
check.
Correct.
So when you leave a home that you own, when you sell a home that you own, you're getting equity, you're getting a check then. They're
Yeah.
handing you cash. They're not handing you the bill.
This is what we're talking
So
about,
this is what we're
equity.
talking about when we're talking about equity, and we're talking about why it's so important for home ownership.
What is equity, Katie?
Equity is when you leave your house and they hand you a check
Yep.
because you sell your home.
But it's also if, let me give you another example. If you bought a home today, just an example, for 300,000, and then in there's comparable homes in your area to yours. 3 years later, you want to see what the house prices are in your area, and that same home that you bought for 300,000 is now 380. That $80,000
Mhm.
is your equity.
Mhm.
Guess what you can do with that equity? You can cash out, or you can do a home
Renovation loans. There's
renovation
all
loans.
different things you
There's
can
so
do
many things that you get to do
with
other
that
with
equity.
that equity. So there's some, you can renovate that same home and make it what you really wanted if you wanted to change, or you get to cash out and use that income towards your next home that you really
Mhm.
wanted. That is equity, guys. So when I said early on at the beginning that we were going to talk about equity, that's what equity can do. Please be mindful that you don't want to drive in your car, right? You don't want to drive a mortgage payment.
Right.
If you don't own a home, please don't drive a mortgage payment if you're not a homeowner, because that 5 years from now, you don't get anything from that car. You have to walk away with probably fixing something, because how many of y'all know nowadays 5 years something start going wrong with
Right.
a car? You have to put money into it, and
Right.
you're paying what, $800 for more. I mean, for car payments right now, that are, I mean, the car prices have gone up tremendously too.
Right.
But for something nice, you're paying that much, and you don't get anything out of it. Zero equity, zero anything. But you're telling me that you can buy a home, and it may not be your dream home, live in it for a
Yep.
year in today's market, a year, and make 80,000 plus. I had a
Mhm.
lady I put on the market, McKinney. She lived in it for 2 years, only 2 years. She was relocating from Arkansas, lived in it for 2 years and made 150K.
Yeah, that happens a
She
lot.
was crying. I mean,
Mhm.
she was like, Kalisha,
Mhm.
what? Like, she could not believe how many offers that she
Yeah,
got over 60 offers, y'all, in McKinney on that home.
that's
And she
incredible.
made over 150,000. She didn't even put nothing into that house to
And you
get
know
that.
what? That's what's so important when we're looking at homes, and
Mhm.
when our clients are looking at homes, because a lot of times they're like, "Well, it's just not my dream home."
Ugh,
And sometimes it's not going to be, but you
yep.
also have to think that it's not your dream apartment either. It's not that,
Yes.
it's not. You're not, and we're not saying you're not going to get your dream home, because that happens too.
Yeah.
But be flexible on what is in the market and what is in your price point, because it has changed.
Yep.
You can be a homeowner, not live in the house that's the house of your dreams, but that you still love and you still like, and you can still do things to. And in 2 years, you can actually go, that money, that equity
Mhm.
that you're building can go towards your next dream home.
Yeah.
Those are the things that we want to really convey today, because those are things that you really don't think about. Setting the right expectation is so
Mhm.
important. So that way, if you find something that you you really like, it may not be the perfect house for you today, but man, it can be the perfect house for you in 2 years when you're selling it.
Absolutely. And these are all some helpful tips in today's market, right, that
Mhm.
we're experiencing right now that we are sharing with you before
Yep.
we close up, okay? Because these are things that you don't know. The next thing would be you must be open to the idea of providing sellers with a lease back
Yes.
at no charge or maybe for a couple weeks to even a month or months. You're probably saying, well, what is a lease back? A lease back is when you purchase. So a seller, you've closed on the house, okay, but the seller needs the additional time to move out.
Mhm.
So sometimes an agent will put on the listing, seller needs a 2-week lease back,
Mhm.
seller needs up to a month lease back, or whatever the case is. So if you're more flexible with letting the seller stay in the home for X amount of time and
Mhm.
letting them stay there for free, but you are the new owner, most likely in this market, that's what a lot of sellers need, right? Because
Mhm.
they may be moving for whatever reason and they just need that extra time. You have to be
Yeah, you have to
open
be
to
open.
giving them that, or your offers. Because if you're not, the next person is,
Right.
and the next person is going to give it to them for free and not charge them, and
Mhm.
they're going to say,
And
"Hey,
they're gonna
stay,"
win that offer.
and they're going to win that offer because remember, it's the best offer that the sellers are looking for. Who's giving me the best deal for my home? And
Mhm.
that is just not including a price point. So just because you're saying, well, I gave this, and that, I gave 20,000 over asking, I gave a great option period, and you telling me that they want to stay in the house, there's 5 or 10 or
Mhm.
20 other offers that are doing all of that and more. Is
Yeah.
what I'm saying.
And that's
So,
when it's so important to listen to us, listen to what we're saying,
mhm,
because so
I'm not
often
going to tell you
to do it, I
anything.
mean, we're never going to say, hey, you need to do this because we just want to see you do it. We're going to tell you this is what it takes to win the offer.
Correct.
So every time we tell you something that you may not love to hear, which is you're going to need to give a free lease back, or you're going to probably need to offer more earnest money, option money, our only goal is to help you get in that house. And
Mhm.
we're trying to help you.
And I'm not saying that we're going to win you every offer
Right. But
because
we're darn sure going to give you
we're
the
gonna
best
we're
tools.
gonna try to do everything
Absolutely.
we can to win offer. But remember, guys, it's not on me if I don't win you. I'm gonna tell you everything in my professional opinion to do to win the offer, but that still may not be good enough because there's only so much that you can do that you can give, right? There may be so much money you can offer, so much money, whatever the case is that you can only do, and somebody just beats us every time.
That
Okay.
happens too.
That happens a lot right
Mhm.
now. So many we are giving our best.
Yeah.
But our best is not good enough.
Yeah.
And that is this market. Our best may not be good enough for the market, but we're going to keep trying and you're not going to give up because I'm
That's
not going
right.
to give up
We
on
don't give
you.
up.
And if you give up, the moment you give up, you've lost. So even if we keep losing offers, we're going to keep putting them in.
That's
So
right.
you have to have a great mentality in this market and a positive outlook on everything that God will put you at the right place at the right time and where you're supposed to be.
Yep.
Okay. Because as soon as you start getting negative, as soon as you give up, you're defeated anyway.
Yeah.
You're already speaking that over your life. You're speaking that on the situation. So you're going to lose. Even if we lose, we're going to win one. And I
Right.
tell everyone
What's for
that
you is for you.
consistency is key in this market. It's the consistency. The more consistent you are in this market, you will be in a home. And today, you have to be consistent and you have to keep working even if we lose.
It's true.
So that's one thing. Another thing is you must feel comfortable with giving more money on that option fee. We kind of talked about that already, but I want to reiterate that. Don't, oh, I only want to give 200. That's fine. But I'm telling you, you're not using all your tools in the toolbox because that 200, somebody else may be offering 1,000. Okay. How bad, I ask every client, how bad do you want the house? If you don't want the house,
then we're not writing an
more
offer.
than what I'm saying is you don't want the house more enough to put in more option money or more money down, then it may not be the right house for you to write an offer on, is what I'm saying. Sorry, I couldn't get it out. I have too many thoughts in my head and making sure I'm saying it direct
Before our
and
time's up,
professional
yeah.
and a nice way. Because if you're not willing to do it, it may
not
going
be
to
the
work.
right house. Yeah.
It's not going to be the right house because the right house,
You're going to be
what
willing
I
to do
know in
anything
my
and everything.
experience
Yeah.
is people will do anything and everything to get it. Okay.
Yep.
Some of you probably are on here that I saw are asking about builders. So I think somebody said on here, if I'm not mistaken, builders are a hot mess. Or or something like that, or
Truth.
builder. They
Truth.
are.
They are.
Builders are a hot
They
mess.
are a hot mess.
And this goes for me to tell you about the experience that is needed with a realtor. Do you know how many realtors are not experienced with new builds?
A lot.
Too many.
Too many.
Too many are not experienced with new builds. And it's very
It's true.
important that you get an experienced agent that understands new builds, because almost all builders are on a current wait list and or they're doing auctions. So I'm gonna break that down. A wait list is, say, I'll use D.R. Horton as an example. D.R. Horton, any D.R. Horton homes that you go into right now, they can only write a certain number of contracts a week, which means if their corporate office says you can only write 5 contracts this week, it doesn't, they may have 25, 30 people come in that week or more, but they can only choose 5 to write an offer, right? And that means after those five people have contracted, they can't do another 5 until the next week. And that same floor plan that you wanted is gone up 2,500 to 5,000 to and up. I'm not even going to say that. I'm just using D.R. Horton guys as an example. But sometimes that same floor plan at other builders have gone up 50,000.
Yeah.
After they write 10 contracts. Every builder is different. I only use D.R. Horton because I predominantly sell a lot of D.R. Horton homes. I sell a lot of luxury builders to general builders as D.R. Horton. D.R. Horton is primarily a lot for the average first-time home buyer. It's very affordable, I would say, and they deliver great product, right? And you can get more house for a great price. That's why so many people go with D.R. Horton. But I'm using that as an example to say that they only write 5 contracts a week or less.
Yeah,
and
sometimes.
Be prepared for that's the wait list game. And auction is, there's a builder in Mansfield, and what they're doing is they're building all inventory homes. Every single one of their it's impressions homes. And in Mansfield, you can look it up. They build all inventory homes and they auction every home off. So it's the highest bidder on each home. So it's, even though it's a new build for 500,000, you don't get to pick nothing. Everything is already picked. It's brand new, but whoever offers the most for that home is the winner. Did y'all know they were doing that? And it's not just out here. I'm talking about different builders are doing that in the DFW. I'm just giving you an example, guys. But they are doing that right now. Okay. There are full cash buyers out here that are willing to use all the tools in the toolbox. You've heard us say that again and again, and we're going to keep repeating it again and again and again until we are blue in the face. If you are not prepared to use all the tools in your toolbox for this market, I don't know what to tell you, because.
And then that's when you're going to hear from both of us, because we want to make sure that you're on the same page.
Yeah. And I don't say that for you to feel defeated, that you can't be a home buyer. And, we also want to, what do we say? We talked about this in the car, Katie, before coming, that we want to talk about, I'm sure some of you want to know, why is it a good time to buy? Like, why now is still a good time to buy? Because I'm sure all of you on here, like, you're saying all this stuff, but I mean, why is it a really good time to buy? Well, let's talk about that.
It's definitely a good time to buy. Right now, the rates are still affordable. For one, the housing market's still affordable, and you don't want to get priced out of the market. And so that is so big. Even sitting here now, I have builds that we went in under contract last year that now their rate has gone up a full point this year. And so that are barely able to qualify for those houses because the rate's gone up so much. So the longer you wait, the more change the market's going to go through. The longer you wait, the higher the prices are going to be. Summer's coming. Summer's going to be here any day now. Summer is when people want to move. They want to move because their kids aren't out of school. They want to get their house on the market. So the summertime is probably, I would say, the most competitive to buy in. So the sooner you can get ahead of that curve, the better. Somebody can afford what somebody can afford today at today's interest rate might be $300,000. And if they wait 6 months, that same $300,000 that they qualified for today may be $280,000 in 6 months because the rate has changed. And we already know the rate is going to go up, and it might even be less. So you want to find out what you qualify for today and what you can afford today, because that may change in 4, 5, 6, 7 months. So Those things are so important to know. So is it the best time to buy? Now is the best
Yes.
time to buy. You want to do it before the summer, before the rates go up.
Don't have the mindset of waiting.
Right.
It's called missed opportunity.
It's a missed opportunity.
Because what do they say? You're dang if you do, dang if you don't. And that is literally
Yeah.
where it's at. Because if you wait to buy, the longer you wait, the smaller the house it
Yeah.
gets and the more expensive.
Yeah.
Okay. So while you're worried about interest rates, you should be
Mhm.
worried about what type of house it's going to lead you to get, because so many people are like, I just wait for the market. It's going to go down. No,
It's
no,
not.
no. It's not going
It's
down.
not going down.
So do not listen to people when they tell you that the
That there's so
housing
many foreclosures and that we're just all going to go buy
the
foreclosures.
housing prices are going to go down.
No.
They're not going down. Okay? They're not. So I'm telling you that it is best to purchase a home now, right? Because that same home is going to keep going up. And the longer you wait, you qualify for less home.
Right.
You're going to get a smaller home. You may have the same price,
Mhm.
but it's going to, that 300,000 price point, what it would have got you today, it's going to look like a $230,000
Right.
home later.
That's the point.
The key that people are not telling you. Okay. So that's what I want to reiterate on. Don't let the fear of the rate stop you, interest rates, because there's always options for that. Interest rates go up and down.
They always
We don't
do.
know what the interest rates are going to do later on this year or even next year. So while you're thinking about the rate's too high, let me wait. Well,
Don't let the fear get in the way of you buying.
Then you're not going to get the house that you truly wanted. And later on, when that rate does go down, then come to me and tell me what type of house you're going to get then. Then you're going to be unsatisfied again. You're going to be like, I don't want to get a house like this. That's not my dream. I don't want to settle. Then that's going to be the conversation. Because that's some of the conversations I'm having right now with people is they're not liking what they see out there for the price point. And that same person I talked to 2 years ago.
Yeah.
And I said, honey, I told you. And I'm gonna tell you again in 2 more years. The same.
We're gonna be real.
And y'all told me
We're
I
gonna
could
be
be real in
real.
real estate, right? Because you need somebody to give you the real. I'm not gonna give you the fake, because I want to see you become a homeowner, but you have to please listen. You don't have to do anything, but if you listen, I promise you, I've sold hundreds and hundreds of homes. I haven't had one client ever come to me and tell me, Kalisha, you did not give me good advice.
You didn't give me the right
should have
home.
not bought that home. You know what people are telling me right now that I've put in homes 2 or 3 years ago? They are thanking
Love
me.
you.
Because those same people were fearful. They were scared. They were like, can I do this?
It's
Or
the best decision
whatever.
they ever made.
And they're calling me now. I am so thankful that I listened to you, because I would not be in this position now. And that same conversation can happen for you if you decide to buy now. Do not wait. And the last thing is, do not go to a new build unrepresented.
Yeah.
Don't do that to yourself. You don't understand. If you don't understand what it
What's
takes in
going
this
on,
market to build a home, you are going to have a headache. You are going to be like, what did I do? Do not walk into any new builds alone, unrepresented. Call me. I am the new build queen, and I really say I'm the new build queen because predominant of my business last year was 80% new builds. 80%, guys, of my clientele. I sold 69, 70 homes last year. Okay, 80% of that was new build clients that are closing this year. Okay, so I understand new builds all around the DFW and Waco. Please make sure you're getting somebody experienced. But we don't want to keep you guys, and we're going to answer a few questions, and we're going to hop off because we know you got things to do, and we just wanted to share some valuable information and tips today, because we can't express to you enough how much we talk real estate every day. We live real estate every day, and we know real estate.
We know it.
we
know it. And if there's any question that we're not going to be able to get to today, please email me. You can always email me your questions if we don't get to them live. It's kguerrero@s1l.com. That's KGUERRERO at s1l.com. I will get to your questions, I promise. We're going to take a couple of them now just so that we can get on.
Yeah, if you have questions, we are looking at our phones. I am putting my email in the chat box right now.
So Brandy Dobbs says, may I use my 401k? Yes, you can, Brandy. That's a great question. You absolutely can use your 401k for down payment. And a lot of the times there is not a penalty to pull out your 401k. And a lot of people don't know that. There are different things that you can do with your 401k. You can get a loan or you can actually withdraw from your 401k. So that's a great question. I did see one earlier that I didn't get to about, can you buy your rate down on a down payment assistance program? The answer to that is no. You can't buy your rate down, but you can choose a lower percentage cash out. So basically, instead of buying your rate down, you're just not getting as much money back. So for an example, if you take 3% down payment assistance, then your rate might be 4%. If you take 5% down payment assistance, your rate might be 5.5%, hypothetically. But so you would just have to choose a lower percentage back. So you can't really buy it down, you just take less money. So it's kind of equal to a buy down, so to speak, but it's not actually called a buy down.
And some people are asking, do I work in Cedar Hill, or I work all over the DFW, guys, outskirts of DFW, all the way down to Waco in the outskirts.
Yep.
I am all around this place, especially right now.
Yeah.
I'm
I
going
mean,
to
she's
areas I've
more
never
that she's
been.
never seen.
I'm going to areas I've
She's
never
like,
been.
Katie, I don't even know where I'm at today.
I mean, 2
Yeah.
hours away.
Yeah.
I mean, I am all over the DFW because I have to do what it takes, right?
And
to get my
and you're
clients home.
finding those builds that are out in Josephine and Waxahachie, and you're
Yep.
the one looking for all of these new builders
Right.
with new developments that people don't know about. So if you're not following her on Instagram, social media, TikTok, all of it, get
Yeah.
on, because she's going to be able, she'll go to these communities and
Mhm.
show you guys what's available out there so that you don't have to.
Yeah,
So that's kinda cool
thank you,
too.
Katie. So if you're not following me on Instagram, it's at the KNA Realtor. And my Facebook is just my name, Kalisha Anderson. I have a business page and a just a regular page. You can find me both places. But it's important. Follow me, follow our journey. I post a lot of great things, all of my closing. I share a lot of success stories from my clients. And because I want you to know, if they can do it, you can do it too.
Absolutely.
And we're here, guys. We are here. And I hope today that you got so many good nuggets and you
And tell your
walked
friends.
away. Yeah, tell your friends. Our next event, we're gonna be displaying that soon.
And
I'll
we're
put it
doing
in the
different
group.
information on the next event too. So if you want to invite somebody next time and you came to this event, can they message us and say, hey,
Yeah.
I've got a friend that I want to come
Yeah.
to the next
Well,
event, and we'll
you'll
get them
sign up for
in.
the next event. The next
Mhm.
event's gonna have a lot more ladies here to share some stuff. And of
Mhm.
course, we can go on and on. We try to shorten it up. And if we did not answer your specific question today, please email us or call us. My number is 817-917-4557. If I don't answer, I'm a super texter. Please text me.
Yeah.
I am a super texter. So just text me if I don't answer. I like the text messages first anyways. Because that means I haven't locked you into my phone. So most likely I get a lot of calls.
Mhm.
And if you don't leave a voicemail, I do like a text,
Right.
preferably. But again, we hope that you enjoyed today. We look forward to helping you and your family change your lives, because it has changed us. And that's what we want to do for you today. Someone said, before we get off of here, just so you're clear, if you want to see where you stand in this market, or what you can be pre-approved for, the first step of this process
It's
is
me.
getting an application done with Katie. Okay? Get an application done with Katie. That is where you want to start. Katie will get you to me when you are ready for a level 2 consultation.
Yep.
My cell phone number, for any reason you can't contact, or you need to talk, you want to talk to me first before going to Katie, which some people do. They would like to talk to me first. It is 817-917-4557. Okay. Feel free to call me, email me. Again, I've put it in the chat box, my email. But other than that, we hope that you have enjoyed this.
I know.
And we hope that you
so
have a
glad
great
to see you here today, y'all. Thank you
Saturday.
so much.
We will see you guys next time. Have a good day.
Bye. Thank you.
Bye.